Hey everyone, and welcome along to Sunday Market Update. It's great to have your company today. Many of you will be aware that we've made some changes to the format, and that will continue today. At this stage, my team for today, I'll have Alexis in a few minutes, followed by Ash, Shukri, then we'll have Lloyd and a video from Gordon, and largely half the team will be in this week, half will be in next week. We're having a break over Christmas and New Year, and we come back in the new year. We are going to shorten down to teams of about 4 each week, 3 to 4 each week, so that you guys, if you want to watch your people, you can turn up and watch your people when they're on, as opposed to sort of perhaps having people on every week and some perhaps a little bit of apathy around making the effort to come and join us. So I do want to thank you guys for joining us. And if Mike could give some power to Alexis, that would be great. I do want to see if I can grab a screen here. Hang on a second, guys. And just talk about some markets. And look, it's interesting times in markets. And for me, what we're in at the moment is a little indecision time. I will run through some charts and see if I can create some differences to you guys before we hand over to Alexis. And look, one of the things that I find really interesting at the moment is, I'm going to call us in an indecision stage. And what I'm going to do to make my point here is I'm going to run through some of the big trades, the big charts. This is the US 500. Here's a weekly chart. So really about where we were 2 weeks ago on the weekly chart. Certainly still a bullish pattern. NASDAQ, let's have a look at the weekly chart. About where we were 2 weeks ago. Still a bullish pattern, still an uptrend, still a higher low. US dollar index, let's have a look at that. About where we were 2 weeks ago, and really look at this for 2 weeks on the US dollar. Really, it's done absolutely nothing. You think that's done nothing? Let's have a look at this one, eh? Here's Bitcoin on a weekly chart. That is the week in Bitcoin. That is a week that's waiting for some news, waiting for some drive. Let's have a look at gold. Here's again, I'll blow it up for you guys. Here's the last 2 weeks on gold. Boy, that's a market just waiting for something to deliver on it. So a lot of these things, right, they've either done absolutely nothing on the weekly chart, or they're basically back where they were 2 weeks ago. Well, 3 weeks ago, if you like. And still trends are technically in place on these weekly charts because we've got higher highs and higher lows. But there really is a bit of a concern for here. Look, if you have a look at these charts again, we just look through them. If we were to get a bounce around here to the short side, all of a sudden, you wouldn't be quite so convinced. A lot of these weekly charts, that is, still, if you like, higher highs, higher lows in the short term on Bitcoin, but boy, it doesn't look strong. And NASDAQ again, are we going to get another little pullback here on a lower high? Interesting to see. We're going to put a higher high and do the same thing as the pattern, as the US stock market is just immune to everything. Boy, hard to see. But for mine, certainly in markets where we're starting to see, so look at Euro. It'll be interesting on a weekly chart. Again, look at this Euro on a weekly chart. Real indecision down here, right? I'm not sure. I think there's a reason for indecision around the Euro right now. And we are still on this US dollar. This is what's driving this indecision right now. Seeing this pop up, take out long-term ranges, get through this 94 level, which was resistance for the longest time, right? Have a little bit of a look up here. Different world to the one we thought we were living in just a little while ago. This market is looking a little bit different to me. Look, as I said, we're going to change up what we're doing with the show. It's a really important part of it. So today we will have some specialists in from the team. We've got Alexis in next, followed by Ash, followed by Shukri. We've got Lloyd after that and Gordon after that. And we'll have the rest of the team in next week. Julian, I can see you in. If you do want to have a short cross day, just let me know and I will get straight to you. I know there's a bit of stuff going on for the team around the place. So what I'd like to now is get straight to Alexis and get a fundamental view on the market. Alexis, it's a market that's pausing for mine. What's happening fundamentally? Are we going to see something drive us out of this area?
Well, I think consolidation is definitely happening right now. And what I still would like to look at the stuff that we have been looking at all along. And I have been looking at the pound for a while, so I'm just going to share the screen for a quick bit. So when all is in doubt, what I like to look at is try to see the numbers that come up, compare them across the border, right? Because everything else is struggling, I would say, and markets are struggling to open up, economies are struggling to figure out whether or not they should allow people to fly. We have a supply chain issue that's happening globally. It's one of the major worries. If people can't travel, does that mean goods will travel? I know the US is improving its supply chain cargo system. They said that the turnover of cargo sitting there waiting has shortened, and they're working on getting it up to speed. So what I'm curious about is across the board, which economies are still there in the background trying to figure it out, because I think we have moved on into a sentiment view, because I think it's really hard to see where currencies are going out now. It's just, I think what can help me look at where currencies are going is to try to see which governments are which governments are making the job of trying to reconnect with the world and try to figure out where it goes. So why the pound, right? It's had positive quarterly GDP for a while. It's last year, it's there silently trying to sustain. So it's got the highest year-on-year growth despite GDP growth despite the entire COVID situations. It's got a 6.6% year-on-year that is higher than the US, higher than China. I don't know whether it's the way they calculate it, but what really it's interesting for me, it's the things that's happening behind. So a couple of things that's happening behind the scenes, I would say, is things like this, where this is from a local Singapore news. So what has happened recently is UK-Singapore has done a digital trade deal. So currently Singapore has a digital trade deal with New Zealand, Australia, and Singapore, and then now the UK. So what that tells me is something's happening behind in the UK. They're trying to figure out how to recover from this. And then I got a little bit excited when December 8th, which was this is just about 4 days ago, it says that the UK pound sinks to 2021 low on concerns over the new COVID measures. So I do find that the news tends to be a bit more reactive. What happens is the currency will drop, and then the news will come up a reason for the currency dropping. The currency will go up, then the news will come up and report the reason for currency rising. So I got a bit interested. I'm staying interested in the UK because the news has finally said, okay, the pound has sunk to its all-time lows. So which means when we start looking back at charts, I'm going to get ready to see whether is it time in the next week or so will we have that long trade that we have been waiting for, right? So I've been waiting for the pound, I think, for the past three to 4 weeks already. So if we just run across some of the pound pairs, my question is, has pound finally hit its lows? Do we still have space to move lower, or is it time to position ourselves to go long the pound? So first up, I always like to look at the pound dollar. It has bounced off a technical 1.32 number over here. I don't know whether this will indicate a higher low that comes off next week. So that's really what I'll be watching at to see whether we do get that turnaround after hitting its so-called lows, all right? Because it has been reported lows. I'm sure there is an opportunity over here. Pound Aussie, I think it hasn't quite hit its lows, and Aussie seems to be going really strongly right now. But I think the pound Aussie still has a bit of space to fill up here before turning around. So I'll be a bit more careful on pound Aussie, but it looks a bit bearish at the moment. Pound Swiss has recently been testing this 1.21, 1.223 window. It's consolidating, and as always, is after a consolidation, I'm always keen to see where it will break into. So if there is a potential to buy the pound, then it is a question of whether it can get above here or whether it will weaken further and fill in the gap over here. So it really is trying to figure out what the market will do. Now, pound yen is the only one I'm a bit hesitant about. The yen seems really, really strong right now. But again, what interests me is, the way that the pound yen has been bouncing off all these technical levels and a huge consolidation for the past, I think, 2 weeks over here. And the question will be then, all right, does it mean it's time for the, for the pound yen to move up into this space? So as long as it doesn't break below this this level, I am keen to still get ready to long the pound yen, except with a bit of caution because it's a yen pair, right? Pound cat, I'm ignoring. I always feel that the cat has some tie-ins to oil, and oil's wonky at the moment. I'm not sure I understand it, so I'm avoiding it. And pound kiwi has already bounced off its a kind of level over here. So I'm going to be interested to see whether this will be a continuation, or will the kiwis the kiwi is quite decently strong as well on the economic radar. We have the kiwi over, I have to say that right, because I've got Paul who's from New Zealand here. All right, on the New Zealand, you can see 17.4% in the last year. Very, very, it's like almost double, triple, pounds performance. 2.8% quarterly, which is pretty decent, a very decent inflation rate, and a very decent inflation rate and unemployment rate as well. So I'm not too keen to long the pound kiwi. I still think kiwi has its legs down there. So that is another pair that I'll be a bit more careful going long on. So other than that, that's all for me. Over to you, Paul.
Cheers, Alexis. Thanks for that. Interesting to have a look at the pound. A little bit of carnage over there politically at the moment, to see if that settles down and we get some more direction as that unfolds. Thank you for that, Nick. And talking about the Great Britain, next in is Ash coming in from Great Britain. He'll be talking about data and market data, what to have a look at this week. Welcome in, Ash. What have you got, buddy?
Well, I think Lexi's points about the news being quite reactive right now is quite poignant, because what we saw on Friday was CPI data from the United States, which was really atrocious for stock markets in many respects, because it pushes the decision back onto the Fed, and that decision should be, we don't know what it will be, but it should be further tightening or some sort of announcement of tightening or further tapering and looking into interest rate hikes. Now, because of that, I'm really interested in the NASDAQ most specifically, because I think the NASDAQ is the one that's likely to suffer the most. And it is kind of against my DNA to go short on the NASDAQ, but I think that it might be the one time that I'm comfortable to do that. And if we look at what's happened with the data, the data kind of supports it, because when we look down here, this is what we had with the NASDAQ. We had a rise to the upside. We had a break, and it was quite a decent break to the downside. And then last week we had a push up. Now, what that looks like with the data is this. In actual fact, let's look at this first. You can see on the 36-month, 11%, so it's in bearish territory. We see on the 18-month, 11% bearish territory. On the 6-month, 1%, so very, very bearish on the NASDAQ. Now, if we look at what happened with the buyers and sellers from last week, so this is the index down near the lows here, which is suggesting weakness from the COT data. And if we look what happened, we've had a rise in the selling pressure here, the red line here, a rise in the selling pressure, and that rise in the selling pressure is suggesting that the bears are starting to stack up. And last week we had just a dip down in that selling pressure. So we had some of those bears effectively taking their positions out the market, or less sell positions in the market from last week. Now that would look on the face of it as quite a bullish signal. However, when you look at what happened with the buyers have been dropping as well. So this suggests that the move to the upside that we saw last week is more of a pullback, if you like, or a throwback, depends on your terminology. But it suggests that the trend is starting to the downside, and we have a little bounce. So it suggests that last week was more of a bounce than a turnaround in sentiment, and we continue to go higher. Now, the Santa rally is a big thing, and one of the reasons that we do get a Santa rally is that we get fund managers at the end of, this time of year, they've got to massage their numbers a little bit. So they end up getting into the market to try and buy the best quality stocks that they can. And it ends up, having a bullish effect on the market as they do that. So they can go back to their clients and say, what a brilliant year we've had. So we've had that. And I wonder whether last week's numbers coming in, I think it was 6.7% CPI or inflation data. And because it was in line, it might have been 6.7, 6.8, because it was in line with what was expected, the market pushes up. Well, that doesn't make any sense to me at all, because it's still a number which means that the price of goods is way overvalued. They're too high. So regardless of whether the market was expecting it, the moves to the upside that we saw in the market looks to me like a bit of a misnomer. It looks like a bit misleading. And if we see this here, look at the seasonality. Seasonality suggests that throughout December we do get that push to the upside until slowing down somewhat in January, February, and right the way really through to April. So I'm not sure whether we are 100% ready to move lower just yet. And I think that, back to Alexis's point about the news being reactive, I wonder whether that Fed meeting that we have next week, I believe it's on Wednesday, will be the driver that sees that the markets come down, or whether we actually do wait until the new year and then we see the markets come down. Either way, I think the data is suggesting that we are going to be headed lower from these levels. I'd want to see this COT data pick up on the sell side again. But the buying line here does suggest that the bulls are losing confidence in the rally. So the Nasdaq's the one I'm focusing on, mate, and I quite like where we are for a potential short.
Cheers, that'll certainly have some repercussions throughout the entire market. If we see a decent pullback in the Nasdaq, the entire world will certainly know about that reasonably quickly.
Yeah, it's the one that everybody's been going. It's the confident one, isn't it? It's the one that sort of forget gold, forget Bitcoin as your hedge against inflation. The Nasdaq is the where everybody's going. I mean, it's just I don't know. This is markets, isn't it? They continue to surprise us, and this is why we always got to be on our mettle.
So if Facebook's changed its name to Meta, does that mean the FANGs have become the MANGs?
Don't know. I quite like that though. Let's go with it.
Cheers, Ash. Thank you very much. Thanks for your input as ever. Next up, we're going to have our crypto cross with crypto expert Shukri. Going to have my play a video from Shukri for you guys. Following that, we will have Lloyd on Casting Strength Matrix, and after that, we will have Gordon on US stocks. We're waiting to hear see whether Julian wants to pop in as well. Maya, okay to play the video from Shukri?
Let's do a quick review for this week. Bitcoin, okay, going nowhere. Spotted there, 49. It shouldn't really go below like this, 46, or even around 48. That would not be good for the entire market. So kind of well supported. Ethereum did a brief dip below 3.9. Was it 3.8? Okay, yeah, brief dip here. That was last week. Dip here, yeah, 3.8, and then it's up again above that. But what I want to draw your attention is this sandbox, because the crash came, and literally what really imploded was these coins, these gaming coins, metaverse coins. Look at that. That is a blow off top, and then it goes up again, lower high, and then boom, it goes down. This is what we saw in Bitcoin in 2017, 2018. This was exactly the structure of the blow off top. But before we go ahead, while these are struggling here and Bitcoin is also struggling, if you had bought down here, you wouldn't worry, right? But NFTs are doing very, very well here. This is an example here. There's an NFT called League of Ancients, which was modeled after League of Legends, right? That has gone 30x. You buy the NFT, you kind of get the token. So you kind of get the NFT for free. You can now go play to earn essentially for free. Good deal. Another deal is this. This is good. I got an airdrop for this. This is Artifact. Clonex coming out very soon, probably this week. Reveal 3.52. That's great. And this is cool. Gazers. This is like minted at 0.25. It has essentially gone, whoa, how many times is this? Like 15 times, is it? Yeah, 15 times. I think this is good, okay? So look at other facets of the market because they are still in bullish mode. Thanks.
Certainly interesting stuff from Shukri as we do. We'll look at this crypto market and work out what is going to happen. A lot of those crypto coins at big levels. We see Bitcoin get below that 200 moving average, or Ethereum below its average there as well. Be some space underneath that for a solid move down. Be interesting to see where the support holds, which is, the probability, or whether it breaks, and if so, whether it takes off in a bit of a move for us. Next up, we've got Lloyd. Lloyd joining us to talk currency strength matrix. Lloyd, are you with us?
Yeah, I'm here. Let me grab the screen.
Cheers, mate.
Right. So last week, what I was trying to do is I was trying to short a pound dollar. In fact, I didn't get in at the level. Shortly after I get it out, this was a stop out trade. Yeah. So I didn't get any profits out of this. The second trade that I was really trying to trade was Kiwi yen. The break and retest didn't work out for that particular week. Yeah. So last week I was down 1%, but previously was good for me. Now the upcoming week ahead is a bit odd. Yeah. So So Aussie actually rallied quite hard at $70. I was telling you all that, look, at such a huge level, always keep a lookout. Price might bounce off, might break hard, but it seems like this time around, price itself will actually bounce off hard. Yeah, so giving us a sort of an engulfing buy at Aussie. Yeah, so keep a lookout. If the upcoming week ahead, price actually did break this short-term horizontal level, we might have a nice play of break and retest, and for us to actually trade for a long side. So keep a lookout for odd. It's going to be interesting for Aussie. Other than Aussie, the rest of the currency is pretty hard to trade for me. Now, yen, this is what 2 weeks back I mentioned that this is one of my favorite price actions, engulfing tail bar. Since then, yen actually didn't really go anywhere. It's still stuck at $88, not really providing much of an indication that it will continue its rally upwards. But looking at what it has indicated that it has stubbornly stayed above $88, we might have a chance that yen might actually break out hard the upside. Potentially speaking, this would be good, but technically speaking, it didn't prove to be so. Yeah, but worth keeping a lookout for. DXY, now price actually still keeping its head hooked above $95, but since then it didn't really give us a good indication where it wants to go. It is still consolidating hard. As such, DXY won't prove to be a good trading pair. The USD pair won't prove to be a good trading pair for the upcoming week ahead. Swiss again is actually not going anywhere, so I'll leave it out. It has been in this direction for a couple of weeks already. Now the Canadian index, it seems that price wants to poke below $78, but doesn't really have much momentum or incentive to do so. Yeah, so I don't really want to touch Canadian index as long as it's above $78 because it's really doesn't have conclusive evidence that it wants to go anywhere else. Now the British pound, it broke hard below this horizontal level. Sort of retested a level, but then for previous week, it didn't really tell us where it wants to go. Now, it is still showing us weakness to the pair, but I don't think it's actually, from what the chart is showing me, it doesn't seem to be trending downwards hard. It seems to be taking a pause this week. We can look forward to trade pound short, provided it gives us a good retracement. Euro, pound, both of this pair currently seems to be taking a break, not going anywhere else. Dominant direction is still short, and the last on my list is actually Kiwi. Price has tested the horizontal level very, very nicely, so I'm looking for a short positions for the upcoming weeks ahead. So as you can see from my analysis, I don't have any really fantastic pair to trade, but Aussie Kiwi seems to be the best among them, so I'm waiting for a retest of this level, then I can go for a long. Other than that, I can't really recommend any other pair. Yeah, most of them seems to be consolidating of sorts, so we might need to have a bit of patience for the next 2 weeks ahead. So that's all for me, Paul.
Cheers, Lloyd, and the team will be back next week with the people who aren't here today will be in next week. So this week we've got Alexis, Ash, Shukri, Lloyd, we've got Gordon coming in, and next week we will have Julian bring in Orlando and the rest of the team there. So you will see half of us this week and half of us next week. We're going to hear next from Gordon Scott on stocks. Mai's going to play that video for us in a few minutes, and then we will wind her up for this week. So we are going to try and keep the show around half an hour, perhaps next year around 20 minutes with different people coming in, maybe teams with 3 or 4 coming in each week and doing nice direct crosses. Mai, are you ready with Gordon's video to hear about the US stock market and how it might impact currencies? Thanks, Mike.
Hi, everyone. This is Gordon Scott with a weekend update for the U.S. stock market and a couple of ideas, things to watch out for in the coming week. I want to look at this chart right here and let you know what's going on with it. This is a look of the sectors, the comparison of the various U.S. sectors. These are the major portions of the market. And the ones that are really important, I have put dots on the lines. And so these are the ones, so the U.S. market sort of rebounded last week, finally kind of hit bottom and came back up. The S&P 500 is almost back up to its old highs, and NASDAQ and the small cap Russell 2000 are not back up. The big question is, will they begin turning up? And I believe the answer to that is yes, because both Apple and Microsoft had a really strong day on Friday. And so I think that we might see a little more selling through this coming week, but certainly we will have what's called a Santa Claus rally somewhere about December 15th all the way through the end of the year and into January. We'll probably see the markets moving higher. The U.S. market's moving higher, assuming that they're done with the little dip. Now, as I say, there's a good chance it could lead back down, and the reason for that is that I think that required minimum distributions are kicking in for people's retirement accounts. That's a little more lengthy subject, which I'm actually going to cover on Monday, but the bottom line is that some people have to take money out by the end of the calendar year, take money out of the stock market. Not a lot, but enough that it could nudge the sellers and maybe kick in some algorithmic selling pressure and influence on the indexes over the next week. But either that happens or it doesn't. One way or another, they sort of find a little bit of support. Of course, they're meeting this weekend. The U.S. government, Congress, is meeting to raise the debt ceiling to do this deal, and of course they're going to get it done. The question will be, what terms they come up with. But the big run up on Friday was in anticipation of them getting this deal done. Well, the deal just means that the U.S. government can keep spending money that it can't account for immediately, but so that they can keep paying all of their far-flung employee apparatus and various social programs going. I mean, it's a lot of countries have this same kind of dynamic. The U.S. government just has this weird need to keep increasing their credit limit, so to speak, every so often, and they're in the crux of that right now. If the market thinks that it's a good thing for the U.S. government to do this, then we probably won't see any sort of dip. If, in fact, the terms come back a little bit more questionable, or that somehow market thinks that that's bad for the economy, then we will see a bit more selling this week. And it's hard to say because, the NASDAQ's still down, but the S&P is up strongly. What that really means, though, if you look here, you can see is that people are generally bullish, but they kind of want to hedge their bets. So if you look at this, the two sectors that are leading are the technology sector, XLK, that purple line, and XLP, consumer staples. Consumer staples is stuff people need, toothbrushes, toilet paper, and so forth. And that whole sector is doing quite well at the same time as technology. It's a little weird because usually the growth stuff goes or the defensive stuff goes. The defensive is the consumer staples. And they're both going at the same time. So I think that that's the market showing this sort of schizophrenic ambivalence. So like, I want to invest, but I also want to be safe. How can I do this, right? So that's what they're doing. They're splitting their money between technology and consumer staples. Well, consumer staples and technology, the company that most embodies the connection of those two on the planet would be Amazon. So Amazon should be a good deal right now, right? Wrong. So look at that chart, ugly looking. Now this is a thing. When you come across an idea like this, where you see sectors or whatever doing something, and you say, all right, that should logically follow that when you go looking for it and you see that the stock is not responding, then you know that stock has other problems going on. And it does. I mean, Amazon probably has exposure to the weakness of the Chinese markets. That would be my guess. In any event, Amazon's going down. So if Amazon's not doing well, who is doing well? Well, that answer is pretty easy to find. Basically, anything you could call Amazon's competition. Walmart, Costco, Procter & Gamble, McDonald's Corporation even. Look at all of them. Look at what Costco and Walmart did. Just right after earnings, Costco went and hit an all-time high. This is just the beginning. Yeah, Costco's clear up at $550 or more per share, but this is Costco is probably going to have, in this time of inflation and this time of general, a lot of people want to say the economy is doing poorly in the U.S. That's not true. The economy is doing quite well. It's just that people aren't used to the high level of prices and so forth. And so, how do they respond to the fact that they have money, but everything costs more? Well, you go to a place like Costco and shop there. That's what they do. Walmart, similar situation. So both of those are doing well. McDonald's is also, when consumer staples do well, McDonald's tends to do well. Also, Procter & Gamble, the company supplying all of these consumer staples stores and companies. So these are the kinds of stocks that are doing well right now. But it's a bit of a inflation play, because it's not simply that, everybody thinks the market's going to go bad, so they're putting their money in these defensive stocks. No. It's because these stocks are likely to be able to raise their prices even and not lose customers. Even if inflation comes along, and they can raise their prices because people will still come to them. And there is one other inflation hedge. I might have heard people say things like, well, inflation's coming, and if you're in the U.S. markets or whatever, you've got to hedge with gold or Bitcoin. If you checked out those charts this past week, those things are not going up when inflation fears are mounting. But what is? The answer is real estate. Not just any real estate, not commercial real estate in the United States, but home builder real estate. The ETF that tracks that industry is XHB, and you can see it's trending up. Among the stocks in there, D.R. Horton is the largest single most influential home building company in that sector. Home Depot and Lowe's are also, they also benefit. You can see all these stocks are going up. But the one stock you probably want to pay closest attention to is TPH, Tri Pointe Homes. They're not a household name, but they are a strong company. And you can see they've gone from 22 to 28. That's about 30% increase here in the last 2 months. And as I say, they're probably just getting started. It's not the time of year in the U.S. for home sales to be, we're coming into winter. This is actually a time when home selling slows down just a little. So clearly people are expecting more growth to come in the coming year, because interest rates are, the rumor that interest rates is going to go up sometime in 2022. That means people are going to rush to lock in mortgages with low interest rates before they creep any higher at all. And that is just going to help home builders have a pretty good next couple of quarters. That's what I think we're seeing here, is the anticipation of that move. And that it is playing out, that people are still buying homes. It's still a buyer's market in most of the states of the United States. And so this sector, or this industry, home builder industry, if it's going up, the rest of the market is likely to keep going up. It's kind of a canary in the coal mine, so to speak. If all of the market starts getting weak and you think the U.S. market is going to go into a bear market, you would see it happen in this industry, in the home building industry, first. No sign of that happening. Quite likely we can expect to see the markets rise, generally speaking, through the next couple of months at least. And But yeah, if you want to get into more detail, show up on Monday morning at the hour that the U.S. stock market opens, and we'll be there to talk about what stock to trade. Until then, take care and trade well.
Thanks everyone for joining us, and thank you very much to Gordon for that stock update. If you do want to watch his show, he's on Monday night, an hour before the US Open. You can check your local times for that. I do think it's around 8:30 Singapore at the moment, but I'll get one of the guys to check that, or you can check that yourselves, please. Welcome everyone. Nice to see so many of you in. That is the end of the show today. We are going to try and keep it around 30 minutes. Do join us next week. We'll have Geoff and we'll have Julian and we'll have Orlando and we will have many of the team that aren't here today come in and help us out next week. And that'll be the last show. The 19th of December will be the last show for 2021. We'll be back in early to mid-January 2022 with a slightly different format as we try and run in some smaller teams and keep the market updates really concise and clear for you guys. I'll be back next week. I'll see you on the 19th. Until then, take care, make good decisions, stay calm and make good decisions. It all works out in the end. And look, it's a week 4. I think just taking care. We will see these markets move at some stage, but right now, a lot of indecision in the market while it tries to make a decision. As retail traders, our role is to let that happen and follow along. Cheers, everyone. Have a great week.